Well, after a short bout of volatility with some pretty punchy moves coming through in names like Nvidia and Supermicro, we are seeing equity markets starting to find their mojo once again, specifically that in Europe and US markets as well. Now, we're just seeing Tesla coming out of a report, pretty dire numbers, doesn't matter, the stock's up 8%. And we also look at big names and big earnings coming through from the likes of Meta, names like Google, and also IBM and Microsoft as well. Now, we also look at gold and where the level is that traders may look to buy the dip. And we also look at what's driving FX markets as well. It's time to get in front of the screens. This is the trade-off. Well, hi there, my name's Chris Weston, Head of Research here at Pepperstone. I'm going to be joined in 2 seconds from Mr. Blake Mojo from Forex Analytics. And we're going to be discussing all the factors that are going on in these crazy world of markets, what's happening in FX flows, the different setups that we've got front of mind, this kind of reversal that we're seeing back in equity markets and whether it can be sustained coming forward. A lot to discuss as always. I'm going to bring Mr. Blake Mojo into the program. Blake, how are you, my good friend?
I'm doing great. Good to see you, Chris.
Good to see you too. Obviously, last week I was looking at things like long Dow, short Nasdaq. That played out pretty well for a period of time. Just reversed that, taking that position off ahead of the big earnings deluge we've just seen. Tesla was down 7 days in a row. I'm sure we're going to be discussing that one. Couldn't make it an 8th. Actually, I think since the last 20 years or so. The stock's down 7 days in a row, 4 different times. It always bounced back on the 8th time. So I think that was going to be the case. Pretty dire numbers in terms of the earnings. There's no reason to buy the stock, but the stock's having a strong rally. So obviously, 3-year highs in shorts. People looking to cover on that one as well. The US dollar's a crazy beast. We did see a lot of interest in this divergence trade. The US are going one way, Europe, UK potentially going another. It does seem to have been mean reverted a little bit, and some of those dollar longs are taking off the table. How's your week been?
Week's been good. I was traveling at the end of last week, and seeing Tesla. I think going back to that point, Tesla. All the bad news is already out. I mean, I actually saw a Cybertruck not a separate note, but I saw a Cybertruck on the road, and it is quite polarizing. But they recalled them all, but we already knew about that, right? I mean, they're laying off 10% of their workforce.
Because of demand, I don't believe it's all priced in, to be honest. I think there's a lot more downside, to be honest. But I think maybe short covering in the short term. Those Cybertrucks are disgusting, aren't they? Personally.
They are polarizing. And seeing them actually drive down the street, I've seen them parked around my part of town, but actually getting a good look. I was in Texas and I saw one driving around. I'm like, they are very polarizing to drive next to.
I'd love to see one. I've never seen one in the flesh, to be honest. I've seen them pictures of it on Twitter and stuff like that, but it'd be interesting to see one in the flesh. And I'm sure they go ridiculous speeds as well. But yeah,
pretty cool. Anyway, needless to say, as you're right, talking about the dollar, we are seeing a little bit of mean reversion. I like that. If you remember a setup from last week, I talked about the dollar, possibly pulling back and to fill my boots. Well, we're getting to those levels, Chris, where I'm starting to think that the dollar might look interesting over the next couple of days, especially going into PCE this week.
Into PCE, indeed. Anyway, let's go to Topical Thunder and discuss some of those factors. Yeah, let's start with the equity move because it's been an interesting one. Last Friday, obviously, we saw some incredible moves playing through in names like Nvidia, 10% to the downside, Supermicro, 20-odd%. Some momentum names were taken to the cleaners effectively. Some pretty chunky volumes playing for 78 million shares or so in Nvidia on that day alone. But it does seem that maybe people were getting concerned about a rise up in bond yields. Real rates were moving higher. We'd seen the 10-year, or the 2-year trading into sort of 5%. People were thinking perhaps that's going to impact. It's going to start being a negative in terms of present value for these names. People going into the weekend looking to hedge out some of that geopolitical risk. Obviously, over the weekend, we'd been seeing, it looks like Israel are now firmly sort of focusing its attention on Hamas again rather than Iran. People are seeing the chance of contagion or spread around the region dissipating, and we just sort of moved back on. And now we're seeing a bid coming through in real rates. Real rates have moved a little bit lower. Credit spreads are tightening up. People are saying, let's get back into equity. European equity markets looking strong. US equity markets have found their bid. Nvidia is trading better. We're just seeing Tesla's earning. We've got a whole raft of names we'll talk about in the next section. I was looking for a bit more downside last week, but now I'm starting to think that the path to least resistance in the short term in the Nasdaq, Russell, probably is higher. So I'd be like to trade this from the long side at the short in the short term here.
You know what, Chris? I see it as two-way price action, which as traders we welcome that. There's nothing worse for me or for most traders actually than a grinding market in one direction. So to get this two-way price action, it's good. We did get our garden variety 5 to 10% pullback. Like if you look at the S&P, I think the pullback was just shy of 7% from the highs. People are feeling a little bit, for the reasons you pointed out, people are feeling a little bit more comfortable getting back into risk. But I think a lot of technical damage was done almost across the board. So with that being said, I don't know if we actually trade back to all-time highs. I still think there's a couple of days for a good bid. Yeah. But I'm actually looking to sell into rallies, but I'm also looking to buy into dips. So I think this two-way price action is just the way to play it. I love playing both directions in this type of environment.
I think you've had so many people coming, market's oversold. Didn't hear that before, but yeah, a lot of these oversold models are creeping up. What I liked is if S&P futures came right back down to the 100-day moving average bounce off the level, on Monday I would have liked to have seen a close above Friday's high. Didn't happen, and that's why I was saying, not sure about this. That happened today. We've seen a really strong move up through Friday's high. So that's why I quite like it. We were a bit unconvinced yesterday. I didn't want to buy it because we couldn't close above that level. Seen that today. I feel like, short term, that there's probably a bit more juice on the upside in the short term, which leads us to
earnings. And I'm glad you threw that one right at me, and you just picked up, and I'll knock it out of the park here. Look, as you pointed out, we had Tesla overnight, and Tesla's bid up despite the horrendous earnings. But before I go into like some of the companies that are coming this week, if you look at today's earnings, you look at the earnings on Monday, which weren't a lot of big companies, more today, and the heavy hitters come throughout the rest of the week. Yeah. Earnings aren't bad, and I think that's helping the bid in equities. So I think in the near term, I would agree with you. I think there's a little bit more upside. S&P 5100, 5150. Now I'll see how the market looks after that. But we can't deny the fact that, you take a stock like Tesla, you had bad earnings, stock is still up post-market. It's probably going to gap up, it'll probably sell off, try to close that gap a little bit, and you buy into that weakness, in my opinion. And that's how I'd be playing Tesla. But there's a lot of big names. Wednesday, tomorrow, if you're lucky enough to be watching this right after we post it, which, by the way, if you subscribe to the Pepperstone's channel, you hit the bell icon, you can get notified soon as this video comes out, first thing in the morning. So Wednesday, we got Facebook or Meta. We got Qualcomm on Wednesday. We have IBM. Everybody's looking at the chip makers. We have Boeing. I flew on a Boeing. You know what they did, Chris? They take Boeing off the little card, so it says 737 with a B. Doesn't say Boeing anymore, just B. So we got Boeing, we got Chipotle, Mexican Grill. Thursday, we got Microsoft, we have Alphabet, Google. We have Merck, Caterpillar. We also are watching chip makers like Intel on Thursday. Friday, we have some energy names like ExxonMobil and Chevron. I almost said Chevron Texaco. That's old school. Anyway, Chris, there's some big names coming up this week. If I've got my numbers right, 40% of the S&P reporting this week. Is that right? The bulk of them?
No, absolutely. Yeah. So that's right. I mean, I think looking ahead of further down the line, Amazon's going to be one that everyone's watching. Everyone loves Amazon. It's the buy side favorite. But yeah, Meta, the implied move in Meta is 8%. So you expect some fireworks in there. IBM. Yeah, obviously, Microsoft tomorrow on Thursday after market is going to be the big one, one of the biggest stocks in the market. So, yeah, I think the market's implying about a 4% move in that one as well, 5% in IBM. So, yeah, look, the bottom line is will all these stocks rally or go down together? Unlikely. So it's going to be the influence on the market is going to be very strong. If they all beat and the market rallies, fantastic. You're going to see some huge moves coming through in the Nasdaq once again, but it's going to be very difficult to see that. But obviously, if you're trading the individual stocks, look at the outlooks, look at their involvement in AI, all that kind of nonsense. But the market is implying some pretty punchy moves in these stocks, which invariably means that we could see some big moves coming through in the Nasdaq and the S&P as well. So, yeah, for you index traders out there, just be on your toes. A lot of it's going to be coming right after the close of the market, and that's where that window that you've still got the futures open, and our CFD products are going to be open. They could come alive with the smell of volatility. Anyway,
I love this.
Yeah, let's see what they have to say, because it could be pretty soon. Hopefully, gets a little bit lively. We'll see what happens there. Let's go into FX move, because we have seen the dollar break back below that sort of 106 level on the dollar index. Euro dollar had been going down to. Down to sort of 106, and that sort of coincided with a real widening of spreads. Everyone was saying, the ECB are going to be cutting in June, the Fed might not cut this year. The Bank of England, their inflation rates look like they're coming down towards Europe's, and they're going to still be cutting sort of mid-range of the year. And so we saw this clear policy divergence which had been driving the dollar. And look at the US 5-year government bond yields were trading about 221 basis points above German 5 years. It's come back to about 211, and that's coincided with a move back in euro dollar to 107 levels. So we are seeing those yield spreads, which represent the policy divergence, working quite well. Japan obviously is a big one there. LATAM FX has probably been more towards sort of lower volatility and driving people back into carry. But in terms of that, how are you been? I know you're a big price action technical guy, but look, how much are you watching that policy divergence driving dollar pairs?
Well, I'm watching it a lot. And actually today's data, when you talk about the Eurozone UK PMIs, and then you had the US PMIs, which came in much worse. It's late in the day for me. Always remember that. It's late in the day, and I only had 4 hours of sleep 2 days ago. Anyway, the US PMIs came in, well below expectations. And the scary number was more of the services PMI. That was quite a big drop, and still in expansion territory, but still that was the biggest drop I think we've seen since like the COVID timeframe level. So it's been a while. Anyway, UK Eurozone PMIs, the services PMI is a little bit better. Manufacturing PMIs still look in the dumps. Needless to say, those spreads have closed up a bit, put the euro back at 107 from 106. I still think upside's fairly limited, but you're right. That's what's driving the market. I still think that, as I pointed out last week, I'm looking for a pullback in the dollar. We are now experiencing that pullback as we speak. And so this is the week where the rubber is going to meet the road as we head into PCE, because the market is focused on inflation. The Fed's focused on inflation. That means this PCE is going to matter this week, Chris.
It will do, yeah. I mean, if equity markets still rally, which I suspect is a possibility, then the US dollar might struggle in that environment. But yeah, the PCE number, so 0.3% month on month is the core expectations. If anything above 0.4%, and I think rate cuts get taken off the table a bit more. Dollar rallies, anything below 0.25, 1% month on month in core, and I think the US dollar gets taken down a bit. So that's kind of loose playbook that I'm looking at there.
All right. Well, let's talk about playbook. Let's turn it over to the BOJ. Really big meeting coming up the end of the week. Now, last week we talked about yen intervention. I believe that was one of our topics.
And the week before that.
Or is it the week before that? Well, interestingly enough, Finance Minister Suzuki mentioned the word intervention, about 24 hours ago, right? And that spooked the market a little bit. But then the Nikkei today ran a story saying that the BOJ is going to discuss the impact of yen's rapid slide at this week's policy meeting. Now, my colleague, and you know him very well, Ryan Littlestone, he talked about it this week about how the CPI, Tokyo CPI, is going to be just a few hours before the BOJ meeting. Not expecting any intervention, but will there be talk about the BOJ, about the weak yen? And will that spark potentially with inaction, pushing the dollar yen a little bit higher, maybe above 155, closer to 156? But then could that spark a reaction from the Ministry of Finance? What are your thoughts as we go into this next meeting at the end of the week from the BOJ? What are you expecting, Chris?
Well, they've talked about it before, and then they kind of poo-pooed it a little bit that a weaker yen could mean that there's a greater chance of raising rates. I'm not sure that's going to be the case, but the Bank of Japan don't obviously do the intervention. It's the Ministry of Finance who do that. That said, we did see the the prior vice finance minister talking on Bloomberg yesterday, and he said that they're very, very close to intervention. So we are on notice at the moment. You've got CAD yen breaking out, Euro yen breaking out, Yuan yen breaking out, the trade weighted yuan breaking down. and dollar yen trading at that 150 level, where it's just the market's just hesitant to put it above that level. So yeah, we're very, very close. I mean, they talked about it at the G20. I don't know if it means they're going to start raising rates because of the yen weakness, but yeah, I mean, if I was short yen, which a lot of people are right now, given what we've been seeing from the technicals, then we are getting closer to that point where we're going to get the headlines coming through that they're watching or they're checking rates, and you could see 100-point rips to the downside in a lot of these yen pairs. So obviously do be warned, especially if you're trading on leverage, that we are getting closer to that point. I think there's easier trades than being short the yen at the moment in this situation, because obviously if that's the case, you could be offside and get some decent slippage. So yeah, we are getting close. We're not quite there. I think if we get a break through 155 and that rate change picks up, then that's the case. But I don't think they're going to do it before the CPI number in the Bank of Japan. So I think it's probably an early next week story, if not, late into US trading session. Anyway, let's go to that's a setup and see some of the setups on mind here. Yeah, first one, I think Blake and I got a similar sort of mentality here in terms of because I wanted to bring up the gold chart because we've seen a lot of flowing gold, people saying, where's the level to buy back into? We've seen a bit of a pullback there from the double top. And I think a lot of this has been down to the idea that the gold's obviously been probably one of the preeminent portfolio hedges against geopolitical headlines. Some of those headlines has receded a bit. Equity vol's pulled back, and we've seen it trade down into the the weekly low that we saw. I've got a daily chart here, but if you put it on a weekly chart, that orange line is the weekly low from that week. And you're just seeing a bit of indecision to push it low, a bit of flow coming through. So it does need to hold in on that daily candle. If it breaks above to the top side, then I would be expecting a bit more of a move up. For a break and a close below the orange line, then I think the 38.2% retracement of the recent rally of the whole rally from February through, the 22% rally at 22.61 is probably the level I'd be looking at support coming through and a bit of bid coming through, certainly from Chinese buyers and all these factors. So yeah, it's a bit of no man's land at the moment. It needs to kick one way or the other. I like buying this into sort of 22.61, at least seeing how it reacts into those levels. Blake, what are you thinking?
Well, without getting into my next chart, which we'll be getting into here momentarily, I still believe that these are really strong. These precious metals are really strong. Looking for pullbacks and places to be on the long side still makes sense. It's interesting because you are finding buyers, and this 2300 is becoming pretty sticky in gold. But any dip, I think any meaningful dip, I think you pointed out right. You just look for these key Fibonacci levels to play into, and that's going to take us into silver. I think silver, which will be my next setup, and I know we talked about it a couple of weeks back, Chris, when we talked about silver. And here's the Silver Linings Playbook. Hey, that is a romantic movie that reminds me of you, Chris, every time I hear the name.
Casanova.
Joking. I'm joking. Anyway, when we talked about silver a few weeks ago, said it's a little bit too overbought to be bought. Looking for a pullback to $26. It's unclear if today's low, because we created this massive hammer, if today's low was sufficient enough to get down to $26. But I still think that any move down to $26, those were the April 2023 highs. If you go back to April 2022, same highs. So that $26, I think, is going to be a pretty pivotal level. I don't know if we're going to be there this week, but maybe following the PCI, if it's a little stronger number, maybe that's the catalyst that drives us down towards that $26. But I think that that's your line in the sand. That's the level that you look for longs. Chris, I know you just provided us very valuable thoughts on gold. What are your thoughts on silver here?
Well, I just think that so the market is kind of moving on unless we start seeing a reignition of the headlines around Iran and Israel, which don't seem to be the case. I think the reasons you buy gold and silver are changing away from geopolitics back into sort of weak dollar, what happens in bond yields, those factors. They're the fundamental drivers. You're going to see ETF fund flows, Chinese buyers, all those factors are going to play a role. But yeah, so I think it's going to be difficult. I wouldn't be surprised if we chop around in silver and gold, just because we're in this kind of transition fundamentally of what's going to be driving it. But yeah, when we come on Friday, that PCE number, yeah, obviously that's going to make a lot of difference. And I think, again, it comes down to the idea if we get a big number, the dollar rallies, and I think gold and silver both get taken down pretty hard. Anything above 0.4 anything above 0.5%, then I think gold and silver are facing some big downside relative to the consensus 0.3. I think 0.25 or below, gold and silver have a bit of a rally. Anything below 0.2, big rally. So yeah, it's a difficult one. That's the kind of risks you've got. Anyway, I want to go back to the yen, because I want to bring up this chart here. It's a slightly different chart from what everyone's talking about. This is actually the trade-weighted yen. Another factor the Bank of Japan will be looking at. And again, it just sort of plays into that higher probability we're seeing now of intervention in the yen from the Ministry of Finance. And look, you can see all-time lows in the trade-weighted index. That trade-weighted index has only been provided since 1990 by Deutsche Bank. But you can see here, this is something that would have been on their radar. The yuan yen is broken out to new highs. CAD yen is flying. Euro yen's flying. Dollar yen's hitting that ceiling. You know, you've got sterling yen, which is hitting sort of resistance levels. But you can aggregate this into the trade weighted yen. So this is something I'm looking at very, very closely. The rate of change, obviously, is downside. Actually, the question I've got to ask as well, Blake, is would intervention actually change this and cause a lasting trend when the fundamentals are clearly skewed against the Ministry of Finance and the Bank of Japan? That's a question for you. I mean, if they come out and flood and buy yen and do it through their reserves and factors, is it going to change the dynamic here, given the relative fundamentals and central bank divergence?
Not based on what we see right now, but look, just before the BOJ meeting, I can't remember, it's Tokyo CPI or national CPI. I believe it's Tokyo CPI.
Tokyo, yeah.
Yeah. So the fact is that weaker yen ushers in more inflation as it is. So, the problem might be not necessarily right at this moment, but looking forward in the next couple of quarters, will the BOJ have to fast track a little bit their normalization process, and will rates have to eventually go up a little faster than expected? And I think that's what's going to cause the overarching reversal. But technically, depending on how big an intervention effort was put forth, if there is one, could create a big false breakdown. So technically, it might look like you don't want to be short yen anymore. So anyway, great chart. I love looking at the 6J or trade weighted yen. Thanks for bringing that up, Chris. Next chart is going to be the Rand. Now, I bring up the Rand because overall, this trend is higher. All right. And when you're in a triangle consolidation like this, and you come out of a predominant uptrend, which is, by the way, I'm only showing you a portion of the uptrend. We are not very far from all-time highs in the dollar Rand. You think about that. However, Thursday we have producer prices. Bloomberg ran a couple of articles today. South Africa's central bank has 2 CPI gauges. Both are elevated. That was one headline. Another article headline, South Africa's central bank says disinflation trend now less sure. And remember, the rates are still at 8.5%. So, when you're looking at the US dollar South African Rand, I know the clear breakout point is above 1940. However, I was just short the US dollar South African Rand earlier today. I closed out for a nice little profit. And you have to remember that the carry interest that you can receive on these emerging market currencies is still quite substantial. So, shorting the US dollar South African Rand isn't necessarily a bad setup at these levels. So, Chris, how are you playing this, or are you even thinking about playing it?
Well, I like the setup. I'll give you that. When you're thinking about carry as well, just remember, we also look at it on what we call a volatility adjusted basis. So you can pick up a high level of carry, but with the South African Rand, there's a lot of volatility and a lot of risk that comes with that relative to, say, Brazil or Mexican peso, which Mexican peso is starting to find some love again. You've also got a lot of political risk. There's elections coming up in South Africa, which I think could move the dial. But yeah, I think the market tells you what they want to see, and the collective thoughts, aggregation flow, is obviously something that we look at, and that this setup, once it completes either up or down, is something that could cause a significant trend, and that's something I want to be involved with. So no trade for me right now, like you say, but when the market shows its hand, I think that's something we can increase probabilities and conviction, go along for the ride. So we'll see how the market presents. Put it on the radar. Anyway, let's go to play of the day. Well, the one I like at the moment is the DAX, the German 40. Yeah, we saw SAP coming out with earnings. Didn't think they were actually that great. Market liked it. Stock's up nearly 6%, and that's got a 10% weighting on the index. So SAP, pushing up, and that looks like it's found a bit of a bid at the moment. I like the fact that we pushed into sort of the highs of 18,600. We had a nice little correction down to 17,400. Really good buying. Hammer pattern coming through. We made a higher high. We've broken the downtrend playing through. We may see a little bit of a retracement. I don't think it's going to be particularly heavy, but I think people will be buying into that. I think given the rate of change, given stochastic momentum started pushing up again, we've had the crossover, I haven't shown it there, and given that its biggest weighting has found a bit of a mojo, it's Mojo again. I think this one trades back to the highs. I mean, I'm not going to trade necessarily the target, but I think that's the kind of level. I wouldn't be surprised if we go back and hit that ceiling. Now, obviously, the euro has an implication for. If you're trading European equities, you do have a euro exposure. And obviously, these private markets are priced there. So I'd like to see a bit of a weaker euro to help this index higher. But I think the way this is trading technically, some of the fundamentals in the index, I think, the probability for me is that this index trades higher and I want to be long it.
All right. Well, I'm going to take you over to my play of the day, Chris. And as you mentioned, the dollar MEX getting some love, getting some volatility love. And I got a little story about this one. Well, first of all, last week on my first setup was the dollar MEX, and I said it's taco time. I said, break above the 200 DMA. It's going to give us a little bit of a squeeze. It did. That wick is real, and that wick actually happened Thursday night, or Friday for you, on the Israeli airstrike on Iran. Spiked us up there. I happened to be long, and I sold into that spike. Now it's coming off, and it's as you pointed out, it's things are kind of calming down. We're pulling back towards the 50 DMA. That 50 DMA comes in around 16 at this point in time, 1680, 1676. Those are the levels that I'm looking for to establish a fresh long since we broke out of that channel. I love volatility like this. I love playing it. I don't care if I have to pay interest for a couple of days, because as long as I can swing out of it, back up towards the 200 DMA, I don't care. And today, Chris, is Tuesday. I know it's Wednesday for you. Tuesday for me. It is Taco Tuesday today. Just so you know.
Wednesday.
Taco Tuesday. Here.
Yeah, it's a big old wick. Oh, jeepers! That would have been catching a few people offside. That one. I wasn't involved in it, but that's some crazy price action right there.
I was long, and I was actually out of town. I was short euros, short Aussie, dollar, long dollar MEX, and I was literally in the hotel lobby. Bar with a few parents and from our son's soccer team, and I was on the phone getting out of everything as that was happening, and it was a nice surprise. So now I got some money for Taco Tuesday.
Very nice indeed. Well, thank you, Mr. Blake Morrow, for joining us and sharing some of those charts and some of your thoughts. And for you guys at home and girls at home, thank you for joining us. Give us a like if you like the program. Leave a comment. Let us know how you're trading the financial markets, and we'll see you back next week for more of the trade-off.